Stocks sliding across Europe this morning as latest economic data shows that Germany's economy has virtually come to a standstill. Chancellor Angela Merkel and French President Nicolas Sarkozy will meet today in Paris to discuss Europe's debt crisis. Well, I'm now joined by Jacob Kirkegaard, research fellow at the Peterson Institute for International Economics and author of Transforming the European Economy. Thank you so much for speaking to us. So, before we get to the Merkel-Sarkozy meeting, just wanted to start by getting your thoughts, your reaction to this Eurozone GDP data, but more specifically, meager economic growth for Germany, 0.1%. Does this mark a turning point for the country that was very much the global engine of growth within Europe and a star performer on the international stage amongst other industrialized economies?
Well, I think it's a little too early to say that if it's a major turning point. I think everybody had agreed that there'd be some slowdown after this very strong first quarter that Germany had. But needless to say, 0.1 is certainly below what I would have expected. And I think almost assures me, at least, that the ECB is not going to pursue further interest rate hikes this year.
So I suppose that in that sense, it brings sort of the situation in Germany perhaps more in line with the rest of Europe. Does that mean it makes the ECB's job just ever so slightly easier?
Yeah, I think, the fact that Germany is clearly no longer booming at beyond its potential growth rate certainly will make the ECB's decision-making somewhat easier going forward. And as I said, should mean, in my opinion at least, that we won't see any more rate hikes for the rest of this year.
Right. The other big focus in Europe today, of course, the meeting between German Chancellor Angela Merkel, French President Nicolas Sarkozy. They've already said that the topic of Eurobonds will not be discussed. What is it going to take for this issue to be on the agenda?
Well, I think, it's very clear that it is already on the agenda, and I certainly think it will be on the agenda unofficially at the meeting today. And the main reason that it's on the agenda is that I think there is a growing recognition in Berlin, especially, that ultimately, if we want to avoid even worse outcomes, such as the breakup of the euro, we're going to have to take some fairly or hitherto unpalatable decisions, such as moving towards a Eurobond. But having said that, I think it is important to realize that one of the things that this crisis has shown is that policymakers can do many things, but they cannot fundamentally make people pay taxes they don't want to pay. We've seen that very clearly in the United States. So therefore, and that's going to be true in Germany and elsewhere in Europe as well. So you cannot just institute a Eurobond in a very short notice in a response to this crisis. I think you can only do it in a very long-term, as a long-term process.
Jacob, sorry to interrupt you. It's not short-term notice, is it? This debate has been going on for such a long time, and it seems as though, you speak to many analysts, economists, they're saying, look, this is what the markets are pushing for now. This is a big part of the reason why you've seen all this turbulence. They want more fiscal union. And it seems as though the voice is coming out of Germany right now saying, listen, fiscal consolidation. We want those weaker countries to cut their spending. We don't want our taxpayers to pay for them. Are you saying you're sensing a change in that tone now?
Well, I think there has been quite a subtle change in the German position here, where they've basically sort of shifted from saying, look, Eurobonds, never, we could never foresee something and we'll never accept it, to basically saying, well, okay, maybe in the long term and under the right conditions, this is something that we can move towards. So you now, unlike just a few months ago, actually have Eurobonds as sort of a long-term carrot, if you like, for the peripheral countries to put their economies in order, to basically qualify for a Eurobond that obviously will pool their government bonds with that of Germany and other strong countries.
Yeah, we'll be talking about this for a while. Yeah, good to get your analysis. Thank you so much, Jacob Kirkegaard of the Peterson Institute for International Economics.